If you're tired of having 10 indicators on your chart and you still feel lost, this video is for you. I'm going to show you the only 4 indicators that you actually need to become a consistently profitable trader. I'll be honest with you, when I was new to trading, I was looking for the holy grail with indicators. I got swept away by all those ads that promised a perfect algorithmic bot that knew exactly where the market was headed and guaranteed you profits, or that indicator that gave those buy and sell signals. You could just follow it blindly and not even needing to learn how to read price action. I've been there, I've tried them all, and I've lost a lot of money trying to do that. So it wasn't really until I started to simplify my charts and create a system based off of these 4 key indicators that I really started to become a consistently profitable trader. And these aren't lagging MACD crosses or RSI overbought signals or anything like that. These are institutional grade tools that tell you where the real buyers and sellers are positioned. Let's dive into the charts. First up is VWAP, the volume weighted average price. It's kind of like the market's fair value for the session. If price is above VWAP, then buyers are in control. If it's below it, sellers are in control. So it acts as like a dynamic support and resistance, and it tells you where the large players are likely positioned. So it helps filter out some of those low probability trades. So you can find it on just a basic indicator, VWAP for the session, and the auto anchor point is at the session open. So Sunday night at 5 p.m. Eastern Central Time is when it's going to anchor. So that's what this blue line is. The way I use this volume weighted average price is typically, if you zoom out to the 15-minute time frame, it'll give you an idea of, like I said, who's in control, buyers or sellers. So in this spot right here, price is above VWAP, it's trending up. You can generally look for longs. And then as soon as it closes below VWAP, like in this case right here, you can start to look for shorts. Sellers have gained control. The reason I like to zoom out to the 15-minute time frame when using this indicator is you can avoid some of those fake outs. So here, for example, price kind of started to fall below, but then it closed back above. So if you had just been patient and wait for a candle closure above or below, you could potentially avoid being faked out for shorts. So that's the way I use the session volume weighted average price. I also use anchored VWAP, which if you use TradingView, that's available for free in the paid version under the projection tools. And if you use anchored VWAP, you can anchor the same volume weighted average price from specific points in time. So for example, I like to anchor it at the New York Open, so right at 9:30 Eastern Standard Time. Also, you can anchor it for a high or a low to be able to continue to watch trend. So in this case, this is the high. I can anchor it here. And you can see that purple line serves as resistance for the rest of that day in this case, in this example. You can also use it for trend change. So let's see a point where, let me put an anchor VWAP here on this low. And you can see where actually that one holds trend. So that came down, it bounced off of that low. So anchored VWAP from a high or a low. You can also do it from a high volume event like an FOMC news release or PMI or CPI or something like that. So using the session VWAP that auto anchors at the open of the session on Sunday night, and then anchored VWAPs for either the high or low of a session, the start of a session, like New York Open, for example, or a high volume news event. So that is how I use VWAP as indicator number 1. The next indicator that I think is important is the session volume profile, SVP. So if you look under here, you can type in session volume profile, and that's what it looks right there if you use TradingView. So let me go ahead and turn this on. What this will tell you is for the session, so in my case, the New York session from 9:30 a.m. Eastern Standard Time to 3 p.m. or 4 p.m. Eastern Standard Time, it's going to tell you where the value, 70% of the trading volume happened during that session. So you have the value area high, the value area low, which is the bottom of this shaded region, and then the point of control is going to be the most highly traded part of the previous session. So that's the point of control, that dotted line. So in general, if you zoom out, you can use session volume profile to see which way the trend is going. So in this case, this was the previous session. The point of control is here. Price is trading above that point of control from yesterday. So generally you can look for longs. Here is the point of control from this previous day. Right here, it starts to break below point of control. So in general, you can look for shorts. Also, it can serve as a range. So what I typically do is mark off the line. So that would be the value area high, and then you have the value area low, and then you have your point of control. So if you were to look ahead, just to kind of push play and see how price responds to these lines, you can see on this day right here, price actually rejected this point of control and moved down. So in general, similar to like I said with VWAP, you can use point of control as a trend bias. So if it's below the previous day's point of control, in general, you can look for shorts. If it's above the previous day point of control, in general, you can look for longs. But it's really helpful to use as a spot for entries and exits on your trades. So session volume profile is the second one that I recommend you adding. Third is the visible range volume profile. So VRVP, that's the one that I would recommend adding for the third one. Now, unlike SVP, unlike the session volume profile, this one shows volume over your entire visible chart. So the price action that is zoomed in or zoomed out on your chart, that's the volume that it's showing. So it helps you find long-term key levels, even if they're off the screen. So this is important. It shows you the high volume nodes, like areas where there might have been consolidation or a lot of trade happening at that level. It also shows you low volume gaps where there might be a zone that it just shoots through that zone, or it like wicks in and out. So it helps you plan those trades because it gives you key support and resistance levels, since price tends to want to return to those high volume nodes. So to give you some examples here on the chart, I'm on the 5-minute chart. I'll zoom out to the 15-minute chart, and you can see the visible range volume profile is over here on the left, and that's going to change when I start to zoom in and zoom out, and there's more price action showing on the screen. So let me give it a chance to kind of adjust since I zoomed out a little bit, and you can see how it changed there. So what I'll do with this indicator is use this to find areas of high volume and mark them off as support and resistance. So for example, this is a very high volume node. So I'll mark that shaded area off. Another spot, I usually try to find a couple right above or below current price action. Here is a good one right here. And you can see, if I zoom in a little bit, it's going to mess up the visible range volume profile, but you can see there was a good little chop area right here, and then it came up and moved up out of that region, came back down, and that served as support for the continuation higher. So that's how I use visible range volume profile. Now, last but not least is the ATR, the average true range. And you can see that down at the bottom of the screen with this red line right here. This measures how much the market is moving, and it's really useful for setting stop losses and targets. Basically, what I use it for is sizing my risk based on the volatility. It also helps me avoid setting my stop losses too tight if there's a lot of range in the market at that time. And then also measuring realistic profit targets. So if you're taking a trade at a time when the average range is, you can see my cursor here, the average range is 9 points, and you're setting a target that's 50 points away, that's not very likely to happen. But if you're in a spot in the market up here where the volatility is 23 points, then maybe that 50-point target is a little bit more realistic. It also helps me personally avoid choppy markets. So you can see down here on this part of the screen, the average true range, that ATR is quite a bit lower. It's right around a 6 or a 7. And that's a spot in the market where we're super choppy. Like this right here could have been a spot to avoid trading because it's really choppy. There's not a real clear direction. For me, I don't want to be trading in a market like that. So when the ATR is really low, it helps me avoid taking those trades. And I'll wait until the ATR is up higher. In this case, it's a 22. And that's where we actually start to get some direction in the market. And you could have possibly read the market and taken that short. So the ATR is really helpful for avoiding choppy markets and then also being able to set realistic stop losses and profit targets. Using ATR on which time frame is often a question. So if you're taking shorts, quick scalps if you're tracking your trades on the 1 or the 5 minute chart, I would recommend using the ATR on the 5 minute chart. If you'd like to take longer swing trades, then you might want to look at the 15 minute or the 30 minute chart. Also, use the ATR to make sure to set your stop loss at least 50 to 70% of the current ATR. Otherwise, you're just going to get stopped out by noise or some quick wick that was an unnecessary stop. So here, the ATR is 20. You probably want to set your stop loss at least like 15 points or so. So that's how I use the ATR. It's super helpful for avoiding choppy markets at a time that I should not be taking a trade. And then also, again, setting realistic stop losses and profits. Now let's put it all together. I'm going to add all of the indicators that I just mentioned onto my chart, and I'm going to show you how I would actually apply this into taking some real trades. So right now I have the chart set at about midnight. I'm going to show you how I would chart things up. So I'm going to mark off the value area high from the previous session, the value area low from the previous session, and then the point of control. So kind of just to show you my thought process, this blue line right here is the VWAP. So right now we're trading below that VWAP, so possibly looking for shorts, but we're also above the previous point of control, so possibly looking for longs. So for me, not in a good trade zone. Also, the ATR is very low. It's at about a 7. I wouldn't be taking trades at midnight anyway, but just to kind of let you know what I see in the chart currently. And then we'll play it forward a little bit so you can kind of listen to how I might be watching for trade setups. So right now we're kind of chopping around in between the point of control from yesterday and we're below VWAP. So I could see if it breaks below VWAP, then we can definitely look for shorts. If it breaks below the point of control, we can definitely start looking for shorts because we are below VWAP. If we're below VWAP, I like to take shorts. If we're above VWAP, I like to take longs. So below VWAP, but still above point of control. So we got to figure out who's going to take control here. If we get above VWAP, then we can possibly look for longs. So let's see what happens here. The ATR is still pretty low, so wouldn't be interested in taking trades yet. Still chopping around that point of control, stuck between VWAP and point of control. All right. So this was all very fast paced. So live, we probably would have been able to take action on a trade. But you can see here, ATR is starting to go up. So we could be interested in having some good volatility. We were holding this point of control and we started to drop below this point of control. So that would have been a good potential to enter a trade. So let's look at this short position. Since we got a closure here, we can maybe put our stop loss right above that previous wick, and we can target, let's look at previous price action. There's a wick here, you can possibly target there, or you can target this low here. This is all just done quick on the fly. So let's say we target this low here. Looking at ATR currently, it's at about a 12, so still not super high. I like it to be a 15 or higher because I trade during the New York session. But since ATR is at about a 7 in that case when I looked, having a stop loss of 25 definitely gives you enough room for this trade to play out. So let's see where it goes. Definitely holding below that point of control. We would have gotten stopped out there. The trade that I took was at 7 a.m. Central Time, so it was right before New York Open. In real life, I probably wouldn't have taken that, but that just kind of gives you an example of how I would have looked for a trade during that time. All right, let's move forward. Now we have a new session. So again, here's the point of control. So we're above point of control, potentially could look for longs, but we are below VWAP. So let's see if buyers or sellers take control here. Let me play it forward. So we're still continuing to reject that VWAP. So again, I would be looking for shorts. You could come, as it comes up here, you can take a short as it starts to reject VWAP. And then again, it comes up to VWAP, you can take a short as it rejects VWAP. So those are areas of support and resistance that I tend to use. I didn't throw on volume profile because we were going fast here. But you can also use this as a high volume node, which is in line with the previous point of control. You can see where all of these start to have confluence and they start to like overlap and give you extra confidence that your trade is going in the right direction. So there's a high volume node, there's a high volume node. We are below VWAP, so let's see if possibly we reject here, or if we start to move above VWAP, we could possibly come up to this area of high volume where there was this previous chop over here. So let's see what price does. It's rejecting this area of high volume so far. If it continues to move higher, I could see this serving as an area of support and then come up to this area of high volume. It's above VWAP right now. So that could be a potential spot for longs. You got to watch where price reacts at all these levels. Now we're holding below VWAP, so shorts are the play. So the key in all of this is everything that I've given you. VWAP, visible range volume profile where there's high areas of high volume, and the session point of control, their value area high, value area low. Those are just areas to watch for and see how price reacts. So again, I was going super fast in replay mode, but as price comes up and starts to reject, you can see how price reacts before entering a short. You don't want to just have a limit order set at VWAP and automatically take a short. You want to see how it reacts first. Same thing over here. I did have, I have VWAP and this high volume node. That doesn't mean I'm automatically going to take a long because buyers didn't show up here. It ended up chopping around this area and then falling below. So instead of this area becoming an area of support, it ended up being an area of resistance. So always be patient and wait and see how price reacts at those levels first. But hopefully that helped you guys, give you some ideas how you can simplify your charts using visible range volume profile, session volume profile, and VWAP, volume weighted average price. All of them based on current price, current volume, and they're not delayed indicators. So if this helped you guys simplify your charts and gave you some clarity on what actually works, hit that like button. Make sure you subscribe if you want more videos on day trading futures, my trade recaps, and real strategies that actually work. Also, comment below and tell me, what is your go-to indicator? What indicators do I need to check out and add to my charts? Or what would you remove from your chart after watching this? Hopefully this helps. Have a great day.